Hello, this is RAJAT BOSE here again to present the 28th edition of our Market Outlook, Stock Reviews, Stock Recommendations. We are going to study the Nifty, but before that, what I would like to tell you is that I have a feeling that the coming week, starting from 20th of November and ending on 24th of November, Friday, is going to be a crucial week. Either the Nifty will get past 19,800 decisively and went on to rescale the earlier high, or it will fall below 19,500, even it could fall below 19,300, because the chart setup is such that either way there would be a large movement, and it would be precipitated not by the stocks in the Nifty but also some leading banks. But that we would discuss while we discuss the Bank Nifty. This week, the Nifty began its journey pretty well. On the Murat day, it opened with a gap at 19,547 and 547.25, and that was the high for the day for that session. It was a narrow range movement between 19,547 and 19,510. The Murat session closed with a 100-point gain. After that, on Monday, it opened lower, and after that, Monday showed some weakness. The weakness saw the Nifty falling to 19,414, but all of a sudden on Wednesday, it posted a gap up open, and maintained that gap. It was because the signal that US Fed might not increase interest rates anymore, and probably it is done with, or there may not be any more tightening, at least in the near term. That's why the equity markets have become pretty bullish. This momentum was carried forward on Thursday being the weekly option clearing day. It saw that the Nifty shooting up to 19,875. That was the high. It opened at 19,674 and posted a high of 875, 200-point run on that day. However, it closed slightly lower on that day at 19,765. Again, it tried to cross the Gann angle. As you can see, the last Friday's Gann angle shows that it almost, the price activity showed that it almost crossed the Gann angle. However, it couldn't do that, and finally it closed much lower on that day, and it closed at 19,731, which is more than 140 points lower from the weekly high. While the Nifty maintained its bullishness, and the weekly chart happens to be a positive green candle chart, that's pretty encouraging, I would say. Weekly chart shows that even though the Gann angle may not have been crossed, but Nifty maintained its strength. In all fairness, it has to be said that barring the banking sector or maybe the public sector oil companies, oil marketing companies, we did not see much of a weakness. Mostly there is some recovery in this week's trading, and chances are that there would be another attempt to actually take out the 19,875 or 19,900, Once 19,900 is decisively cleared, maybe there can be an attempt to scale up the new high. However, we need to see whether it really manages to get past the Gann angle or not. If it does, then there will definitely be a possibility of at least a taste of 20,000 mark if 19,875 is taken out with heavy volume. On the other hand, uh, if it were to show any weakness during the week, first keep a watch over the 9-day exponential moving average, which on last Friday closed at 19,555. As you can see on the left side of your chart, that 9-day exponential moving average is around 19,555. So this 9-day exponential moving average uh, and the 50-day exponential moving average at 19,478. So 19,550 to 19,475 would be the major support zone for the Nifty. Till such time 19,475 is decisively taken out on the downside and the Nifty falls below the downtrend line once again, there is not much worry as such for the bulls as of now is will be starting the next week, that is a week starting from 20th of November, will start with an advantage. By any chance, if it were to fall below 19,332, which is the 20-day moving average, roughly one should consider that 19,300, if that gets taken out, then there would be real sign of weakness. Otherwise, so long as 19,475 is not broken, any dip you may see more buying coming in. But this also shows that unless the Gann angle on the upside, which is around 19,900 now, if that is not taken out decisively, then there would not be much upside movement either. Well, as I said, the Bank Nifty has closed pretty weak this week. And how is it going to behave? Would it fall? Would it see further downswing? Are there chances? Probably there are. How would the leading bank stocks behave? We would discuss all that, and we would discuss the Bank Nifty threadbare right now. Keep watching. The Bank Nifty looks decisively weak now that it has gone down below its 50-day and 9-day moving averages. 50-day was at 43,979 and 9-day was at 43,853. Both the levels have been taken out since it has closed at 43,583, which is lower than both the 9-day exponential moving average as well as the 50-day exponential moving average. However, there is hope in the form of 20-day and the 200-day moving averages. 20-day moving average is at 43,402 at the end of the week, and 43,293 is the level of 200-day exponential moving average. So this range, that is the range between 43,400 and roughly 43,300, this is a major support area. If this support area gets taken out by the Bank Nifty, then there is likely to be substantial weakness, which may see that Bank Nifty might be testing 43,000 mark. So if 43,300 gets taken out on the downside, 43,000 would be the next support level to watch out for, and that gets taken out, then we may head for 42,800 to about 42,400 kind of zone. So Bank Nifty looks pretty weak unless it makes a strong rearguard action and crosses 44,000 to about 44,300 levels. Then there would be some recovery. Otherwise, it is going to show it will continue to show weakness. Bank Nifty is weak for a reason. You look at HDFC Bank, there is a bearish crossover there, and because of that bearish crossover on the weekly chart in HDFC Bank, a bearish crossover of 20-day and 50-day, both the moving averages are sloping down, and that suggests that HDFC Bank might show a big fall from the current levels of 1500. Initially, there might be might be some kind of a minor rise, which I don't think will get past the 1525, 1530 kind of levels. If it does that and sustains above that, then the fall may be delayed. Otherwise, if it were to fall below 1475, 1470 kind of range, then HDFC Bank might actually show major weakness. HDFC Bank being the biggest constituent of Bank Nifty, it will impact the index in a big way. Apart from that, State Bank, ICICI Bank, Axis Bank, also Kotak Bank, all these banks are also showing weakness. So the major constituents being so weak, Bank Nifty might continue to fall. So that is what we need to keep in mind. So Bank Nifty and the banking sector appears to be the weakest of the lot, along with the public sector oil marketing companies, which has shown some reversal signs at the top. Our good old, this is the cricketing time. The third batsman is called the first down batsman. And our first down batsman, the CNXMIDCAP, has always been, or at least during this year, it has had a colorful run. Then there had been a correction. It is still maintaining some momentum. Would it retain the momentum? Would the SIP money continue to push it up? Let's have a look at the CNXMIDCAP chart. CNXMIDCAP is posting a new high. It has closed at 41,811 after posting a high of 41,863. This is the only index among the three indices we track that is posting a new high. Earlier high of the CNXMIDCAP had been 41,686, and this time it is 41,863. So this index, again in a similar fashion as it did between, say, late May, early April to about mid-September, again this has started doing the same from mid-October to current date. There is a bullish crossover between 20-day and 50-day moving averages, 20-day at 39,900 and 50-day moving average at 39,853. So 20-day has already breached the 50-day moving average from below, and that is a bullish crossover, and both the moving averages are upsloping. That gives the fillip. Although there could be a minor correction to the 9-day moving average, which is around, say, 41,000. Hence, the mid-cap index is actually showing a lot of strength. As you can see on the chart, it's cruising along, posting gaps and going up. So retail has enormous appetite for, and whatever be the level of risk at this juncture, it doesn't really matter. It is continuing to buy and support the mid-cap index. So are the fund managers who have been buying mid-cap stocks, then that is pushing the index. So mid-cap segment is still very bullish, although we are on a very steep upswing, but yet the interest in mid-cap stocks is not abating. For the retail, so far so good, it's good news. So long as you see that the mid-cap index is not falling below the 41,000 mark where the 9-day exponential moving average is located, there is nothing much to worry as such, because this is also a similar kind of run that we have seen between April and September, especially the last phase of uh, the earlier run up to say 41,600. That time also it moved up in this fashion, and this time also it is moving up with lot of gumption. So mid cap index might continue moving up. Having covered all the three indices, we come to our stock review sections, and here we find a motley crowd this time. There would be quite a few stocks. And how are they behaving? Are there chances of some kind of good movement or sharp movement? We would see. Our first review stock is Hindustan Unilever. Recently, we gave a recommendation on Hindustan Unilever, and we reiterate that you continue to hold on to Hindustan Lever because Hindustan Lever is showing a bottom formation. Although the chart that you see, the daily chart that we are posting here, has lots of things in it. There is Fibonacci retracement levels, there are Bollinger Bands and moving averages, apart from the candlestick charts, as well as a Gann angle. So this is a bit crowded, but at the same time, this crowded chart or crowded with a lot of devices like Gann angles and Fibonacci's that it shows, there is every reason to believe that Hindustan Lever has already bottomed out. And the last day, when it moved up from a low of 2465 to 2533, it's a major run on the upside. On its way, taken out 9-day, 20-day, 50-day moving averages. Only the 200-day exponential moving average at 2542 remains to be conquered. Once 2542 or 2550 is taken out, I would say that the actual resistance stands between 2542 and the Fibonacci level of 2556. These range, once taken out, the next stop would be 2583. But when Hindustan Lever posts a recovery, I'm expecting it to move up once again to say something like 2662 to about 2700, if not 2750 on the upside. So put a stop below the 2400 mark, and continue to hold on. And if you want to buy afresh, then better would be to buy it above 2556. Once 2556 is taken out, then Hindustan Lever would continue for an upward march, and this is also likely to give a lot of fillip to the Nifty. So Hindustan Lever, despite the fact that it has not been able to maintain on the higher levels, now it is gathering gumption to move up. This stock is going to go up. That's what the charts are indicating, unless, of course, there is for any reason it breaks down below the 2400 mark, and then this reading would be negated and we have to reassess it. But for now, it looks pretty bullish. Our second review stock is Naukri. Naukri, we have given a buy call at lower levels, and from there it has moved up. It has taken some time, but it has given a good move, and now Naukri is almost close to its earlier high. Uh, Earlier during the year, it posted a high on 7th of August at 49.84, a little short of the 5,000 mark. And this time, on last Friday, it has posted a high of 48.35. So roughly about 100 points lower than the earlier high. Uh, it is it has closed at 48.05 and it is likely to continue moving up. Although we can't rule out a minor retracement to the 9-day exponential moving average at 45.77, because whenever there is a 20-day and 50-day golden cross about to happen, there is some correction, and that correction might happen this time as well. If it were to happen, then I'm expecting that at best it will retest the 9-day exponential moving average, which is around 45.80. So if it were to come down to those levels, there would be more buying, because this bullish crossover of 20-day and 50-day moving average with a golden cross, meaning 20-day will be crossing the 50-day moving average from below, and both the moving averages are upsloping. So this is a golden cross. Hence, this kind of a move is actually happening. But Naukri needs to take out the 5,000 mark. Once it does that, then Naukri or InfoEdge, the company name is InfoEdge, the code is Naukri, it will go further up and it would really show major strength. When you if you As I see the weekly chart is showing that this, after a base formation between, say, 4,000 and 5,000 range, it is now moving up and it has a long way to go. So Naukri, if you are still holding, and if you plan to buy more, well, that you can either on a dip to the 9-day exponential moving average, or you buy above 5,000, whichever suits you. You can continue to hold on. On the upside, it might go to 6,500 to 7,000 range once again. Such kind of levels happened in the year 2021. Naukri is about to go to such levels. It may take some time, it may take a few months to reach there, but there is a possibility that in 2024, sometime uh, mid 2024 or any time within the next year, 7,000 to about 7,500 might be scaled up. So continue to hold on, Nakri. Our third and final review stock is Bajaj Finance. As you see the chart, the daily chart on the upside, certain noticeable features are clearly evident. One is that on Thursday, this stock posted a low, an intermediate low at 6931.25, 6,931.25. It was almost close to the open. Open price was 6944.55. And then it shot up very strongly to post a high of 7380, and finally closed at 7362 on Thursday. Probably there could be some kind of short covering or whatever be that was, but there was a huge volume of 45 lakhs 57,000 shares on that day. For a stock of Bajaj Finance's kind, 45 lakhs 57,000 is a huge number. And you can see that the volume bar is pretty high. After that, on Friday, it opened lower. It opened lower at 7140, which is about 200 points lower than where it closed. And finally, it ended the week at 7221. The most interesting part of the whole thing is that for 3 successive sessions, Bajaj Finance tested its 200 exponential moving average, which is around, say, 7140. But on each of these days, it actually closed above the 200 exponential moving average. However, it is still below the 9-day moving average at 73.63, as well as the 50-day moving average and the 20-day moving average. they are also higher. So it has some work to do, but it appears that the high, which was the intermediate high from where the fall began, that was on 6th of October at a price of 8192, it posted the high, and after that it started coming down. So it is already the low was posted on 16th of November, whereas the high was posted on 6th of October. So there is about 26 days in October, and this downswing continued till 17th of November. So 26 and 13, 43 days of downswing it has seen, calendar days, and after that this recovery. So earlier also it tested the 200-day exponential moving average, or almost tested it on around 21st of August, and after that it went on to make that high of there was 6th of October. It posted that high, and again it is taking support on the 200 exponential moving average. So it now needs to take out the three moving averages, especially around the 7500 level is the 50-day moving average at 7530, and the 20-day moving average at 7474. So this range needs to be taken out decisively, apart from getting past the 9-day exponential moving average, which is located at 7363. If these three moving averages are taken out by Bajaj Finance, then the bottom would be confirmed and it would move up. That is the kind of prognosis that we can have at the moment. Now the recovery is getting signaled. So our suggestion is that since we have given a buy call long back, and from there it has actually moved up and posted a high of 8130 or something, so I would say that you continue to hold on, and so long as 6900 is decisively broken out, I think you will see Bajaj Finance moving up from here, or it would still continue to be in an uptrend, although there is a lot of volatility. Finally, we have reached our most interesting, or rather the crucial thing, the week stock recommendation. Again, this time we have chosen one stock. We hope that it is likely to do well. I have done the studies thoroughly, and let's see how the market behaves. If the market behavior and the stock behavior are in alignment, then there would be a good swing. Tata Motors. Tata Motors is our stock for this week. We are recommending Tata Motors. When you see the weekly chart, you see a breakout, you see a green candle, you see a strong movement on the upside. So Tata Motors, as it is from a technical point of view, definitely it is a buy. Our target for Tata Motors would be 751, 781 and 816. 3 to 6 months is our time horizon, and the stop loss should be below 635 on closing price basis. But the interest in Tata Motors is not due to Tata Motors itself only. Tata Motors technically is giving a strong buy signal even at these new high rates, simply because all Tata Motors shareholders would get 10 shares for every 100 shares of Tata Motors. 10 shares of Tata Technologies, that is the IPO, which is going to open on 22nd and continue till 24th, and listing is likely to happen on 30th November. There is a lot of interest for Tata Technologies IPO. It is actually a high technology company that would be catering to aerospace industry as well as heavy engineering industry, and it would also help the electric vehicle industry. So there is a considerable interest about that. there is likely to be a lot of demand for that offer for sale from existing shareholders of Tata Technologies. The price band for that IPO is between 475 and 500. Tata Motors shareholders, they will get 10 shares out of 100 shares held. In this ratio, they are going to get Tata Technologies share reserved for them. They can subscribe to it. That is causing considerable fillip to the movement on the upside for Tata Motors. However, from that perspective, it is definitely attractive. While Tata Motors by itself, the technical chart suggests that there is more gumption left. And once it crosses the 700 mark, Tata Motors can move up. Here, since we are dealing with the weekly chart, we would like to say that 635 stop loss should be used on a weekly closing price basis. So Tata Motors is our only recommended stock, and we expect it to perform well this week and going forward as well. In 2024, even Tata Motors might as well do well. If you like my presentation, don't forget to press the like button, share my videos, share it among your friends, share it on the social media, and do not forget to press the bell button so that you get the notifications from YouTube whenever I post a new video.